Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, December 6th, 2007. The market's closed, and very impressive follow-through from the buyers here today as the S&P 500 finished with a gain of $2.25, or 1.5%. Obvious thing you can see here is that it made it back above this 50-day moving average. It's the first time it's closed above the 50-day moving average in exactly 1 month. So the buyers are still out there, and I was saying 2 days ago that we have to be ready for the potential turn in the market. Looks like it is here upon us, and that this inverted head and shoulders pattern I started to outline earlier in the week is now what I think you can consider to be valid, and it looks like the target from this pattern would indicate a move up towards about 157 or close to the highs. So seems kind of unrealistic that we could make it there very quickly, but this is again a very seasonally bullish time of year, and it's possible we could get it back up to that level, I think, by the end of the calendar year. I don't think it's going to go straight up there. I think this 50-day moving average will now have to act as support, or at least this 150 level. Maybe we consolidate in here for a day or two, build some energy for continued upside, but it's clearly looking a lot more bullish. If we take a look at the Fibonacci of just this whole down leg from the top to the bottom, you can see that it's also in an area that might bring in a little bit of profit taking from some longs, because that is the 61.8% retracement of the again from the highs here, the all-time highs, down to the most recent sell-off low at about 140.5. So it's retraced exactly 2/3 of that right now. So it's easy to look at this market and get excited, with all the momentum. But again, there's not real big volume there, so maybe we're due for probably a little bit of a pullback consolidation, and hopefully this level near about 149.5 or so will provide a decent level of support, and then we can continue this bullishness, because that's exactly, that's the path of least resistance now on the time frames that matter to what we're looking at. And again, this inverted head and shoulders pattern tells the story. It tells a bullish story of this market continuing higher. The 1 minute time frame, you can see in here that we've still got, what the heck is yesterday's data doing on there? Okay, so we've got today the market dipped below the daily VWAP only ever so slightly, but then we had a rising daily VWAP all day, and late in the day, last 2 hours, the buyers really came into this market and decided, I think, to squeeze some shorts and to put some money to the long side here before the end of the year, and try and get their performance numbers looking better, so that shareholders will come back for another year. That's the mutual fund game that they play. The semiconductors, this group has been the strongest really this week. And here, I'd been saying first 2 days ago, it needed to get above 418. That 418 level needed to hold a support, and then we needed to get above 425. It is above that 425. It took it out midday today. Now it looks like that that the buyers are in control here of the intermediate term time frame, and I think you could see this market make it back up towards about 440 or so. Obviously, this group is a lot more damaged than other markets. If we take a look at the most recent leg lower, if we take a look at this leg and put some Fibonacci on that, we could say that 440 would only be a 38.2% retracement of that downward move, and that's probably about where it might meet that 50-day moving average, as that 50-day moving average comes down to meet price. So it looks like there's a tradable rally here. If you're in this, I think now that I would be concerned if the market made it back below about 423 or so. Getting back below 423 would give me reason to be a little bit more defensive, but it looks like it is headed higher, and it's on its way towards maybe 440 or so. The IWM has been giving us the most reason for concern. It is, yesterday I pointed out it's making some bullish signs with this higher low here, and that this level would have to hold in order for any rally to continue to sustain itself. Today we had very nice follow through here. The IWM was actually up 2.6% with its $1.98 gain, and it's quickly closing in on its 50-day moving average as well. Now, if you look at, let's take a look at the hourly time frame. If you look at this, it looks like this market also has made it past an inverted head and shoulders pattern, And if you measure this out, here we can take this low of 73, run it straight up to the neckline at 78. That would give us a 5-point move off of the breakout point. Let's just call it 77. That would give us a potential target up near about 82. Now, whether we can make it that far is anyone's guess, because we still do have a declining 50 and 200-day moving average, which means generally, just trade the long side when it tells you to trade the long side, but do it with less share size. Keep your stops tighter, and you can still make money in an overall declining environment like we have here still in the IWM from a longer-term standpoint. If we take a look at the similar Fibonacci of the highs that it saw back in early October to the recent lows, it's gone past the 38.2% retracement. Looks like it's headed for at least that 50% retracement up here near about 79. And that's about where you'll find the 50-day moving average as well. And it's kind of a coincidence, it looks like, that the 200-day moving average is found right here around 80. So that $80 level had been important in the past, obviously, as well. If we take just a horizontal line and draw it in right around there, you can see again that this level had been important, on numerous occasions as resistance, then a support, support broken, then resistance again. So perhaps this market's headed up towards about 78. Short term, I mean, it was just, real solid buying in here today. It's looking like these levels of prior support are still going to be valid. This obviously took in a bunch of short sellers and got rid of some weak longs who have been chasing this higher. A lack of supply in this market, and those people looking to buy back, that's what gets this market moving higher quickly. It is extended, it is solid, it's steady, but chasing a market like this doesn't really make much sense until it starts to pull back on some of the maybe the 10-minute time frame down towards even just towards this breakout point is 77, 75 or so. If it could pull back down towards there, I would look for some evidence that it's stabilizing and maybe looking for a place to make a purchase if it does stabilize and continue higher. The NASDAQ 100, a lot of important things here on this chart. First, we've got, again, that 50-day moving average is the dotted line. It closed above it today for the first time since, again, 1 month ago, right here on November 8th. So that's important. We also see that this little level that we've been seeing had been resistance, then support on a couple occasions. It's back above that level. That means everyone that sold short under here is losing money. People that bought long are making money. So we've trapped the shorts down here basically, and it's looking very much like it should be able to continue higher. Again, I'm going to say it's a little bit extended here short term. Maybe another pullback and then a push would be a better scenario, but the market doesn't always give us that low risk entry that we're looking for. Sometimes you do have to chase price, and when you do chase price, you do it with smaller share size, and you make sure you're quick on the trigger in case it goes against you. But sometimes these markets can just really take off. So if you want to be in, sometimes you got to just pay up. Otherwise, you're going to be sitting on the sidelines wondering how the market got so high without you. So this level, again, also I'm going to point out was from a Fibonacci standpoint, 50% in here, and also we've got that 2/3 retracement up around that level. I don't think that's going to be very important for this market, but clearly overall we've got a much more bullish, healthier picture starting to form. Although the IWM again is still in a downtrend on the longer term basis. I'm not a long-term trader, but I give you that information just to let you know what the overall environment is. But it's clear that over the since basically that low volume pre-holiday day or post-holiday day from Thanksgiving, that the buyers are being very persistent in this market, and that's when this market has really taken off. You can even look at this market and say, from a measured move standpoint, you call this move A to B, this being point A right here at about 49, to point B would be 52, so that's 3 points. And then you add that from the point where it started right here at 50, That gives us a target in the short term of 53. So things are looking a lot better. The buyers are definitely out there. There's a lot of stocks shaping up, but at the same time, some are imploding. So you have to just take it stock by stock and be disciplined in here.